Hey guys, how is everyone? Can everyone hear me well? Hey Mark, always the first Mark. Nice to see you here. Right, Azam, nice to see you, man. Nice to see you. Right, good morning, good morning. Right, I see Eddie, I see Ayman, Ramona, Saida, nice to see you guys here. Bob, nice to see you. Good morning, good morning. Yes, yes. Ioane, nice to see you. Jackson, nice to see you too, man. Right, Yamilu, right? Yeah, Happy Christmas, Merry Christmas, right? For those of you guys, I hope you had a great session of a great Christmas session. Uh, what do I mean Christmas session? I think about like Asian session, US session, and Europe session, and I'm saying Christmas session. I mean, I hope you guys had a great Christmas celebration, right? Yeah, Azam from KL, nice to see you. Arner, nice to see you. Beyond from Netherlands, right? Is it Netherlands? Yeah. Yeah, I'm not wrong. I keep thinking it's Netherlands, right? Yeah, Xmas too much food, man. Yeah, Happy New Year to you guys, right? Corinne, nice to see you too, right? Nice to see you too. Merry Christmas, right? I think Happy Hanukkah for anyone who's celebrating that, and for those in a couple of days, it'll be the New Year. Pretty exciting times, right? Can you believe it? We actually spent a whole year together, right? We're here together every single week going through trading, charting, right? I'm not sure how many of you guys have been here since January, right? I think there are only a couple of you guys who joined us right when the initial webinar began, right? So yeah, it's uh yeah, full of health and success. That's right. Oh, Ramona since January. That's great. Danushka, nice to see you here. Thanks for tuning in. Leandro, nice to see you tune in too. Right? Bob since February. Almost, almost, yeah, almost the holding the title. Right? There might have been some who were around since November when I was, yeah, even last year November, 1 year ago, I was doing like a little bit of special appearances. Right? So yeah, yeah, it's been a while, right? I think we had a great time learning. We have what I can confidently say so far, one of the most comprehensive webinar series, right? And we are looking to build on that towards even into 2022, right? We're going to cover even more juicy stuff, right? Exploring different asset classes. If there are things that you want me to cover, right? You feel like you want me to share a little bit more on, let me know, right? Let me know in the comment section. I'll do my best to cover them too. Okay. Kalim, nice to see you tune in. Abdul, right? Merry Christmas, man. All right. So today's session, right? Just let me go through my attendee list again. Who is being too quiet over here, right? Do I have some people hiding around in the background? Yeah, okay, okay. We a lot of the usual names. Nice to see you guys over here, right? I don't see our usual guy. Where's Junite? Where is Adam? Right? I don't see them here. It's a little bit weird today. Okay, let's begin today's session. Yeah, let's begin today's session. All right. Yuri, nice to see you. I can see you guys raising your hands. If there's a reason you're raising your hand, let me know. All right. Simon, nice to see you tune in, man. All right. Today's session is the last of our four-part series on trade management. Yeah, I suspect I'm even surprised, a couple of hundred people still signing up today, right? Almost half a thousand people sign up today, right? And I thought like I thought everyone should be kind of winding down a bit, towards the year end. But looks like the market never sleeps and you guys don't sleep either, right? So nice to see you guys tune in, right? Isaac, nice to see you tune in too. Robin, yeah, you're a little bit late today, but don't worry, you didn't miss anything too much yet, right? Today is the last part of our four-part series on trade management, right? And this is where we explore the concept of trailing stop losses, right? It is a really trailing stop losses are the things that it can work for you, can work against you. But if you know how to use it right, you can really, really see yourself hitting those home runs, right? Riding the trend, right? It works for some strategies, it does not work for other strategies, right? It usually um, it really depends because I have a theory that the closer you are, the shorter the time between your stop loss and your entry and your stop loss and entry and your take profit, the more in control you are, right? Once we go into the realm of trading stop losses, it gets a little bit trickier, right? Because in the realm of the trading stop loss, that is where you are mainly riding on momentum. You're riding on structural changes, right? To take a trade to the next level. Slightly different approach, right? So I still think it should be used in conjunction with partial profits. It should be used in conjunction with break even, idea, and validation. Okay, guys, and okay, I think we got Isaac. Oh, you're joining for the first time, right? It's never too late to start, right? So it's good. Thank you for joining us, right? So every Tuesday and Wednesday, we have webinars here at IC Markets. Tuesday is where we go through the live the educational topics, right? And Wednesday is where we go through the live market analysis, where we look at the markets together. Last week you guys saw Cassandra and Kaylin, right? Tomorrow it will be Kaylin, right? Tomorrow it will be Kaylin who will be running the webinar, right? I'm taking a short break, right? These days on Wednesdays I'm taking a short break because it's the year end. It's the only time of the year where I've actually taken a day off, right? So yeah, my wife wants me to wants to ensure that I'm around to have those little celebrations. Oh man, did they? Yeah, I think they have Visor, right? Did they make the bad calls? I'm not sure. I need to go check out with them. Right? They still have not mastered it to the level that I've called it. Desiree, I was wondering where were you? Where were you? Right? I was searching for a name earlier. I was like, oh, it looks like maybe you got a Christmas hangover or something. Okay. Better late than never, right? Now let's begin today's session. All right. So first and foremost, disclaimer, right? Remember, guys, everything in this webinar is educational in nature, so please do your own due diligence before you trade, right? Nothing in this webinar should be construed as investment or trading advice. Okay. So remember, this same disclaimer I've been saying throughout the whole year. Last week's session is not uploaded yet, right? Because yeah, last week's session is not uploaded yet because I think a bit of the IC Markets team are on leave, right? It's like they are taking a break during this Christmas period, so it should be uploaded by next week, by the new year, right? So you can cover the trade management series. If you want, there are some requests for what you want covered in the next series. Let me know. I'm planning it. I'm planning for it now. I have one eye on the crypto space. I have one eye on the a little bit one eye on the crypto space that seems to be a very big thing these days, right? But yeah, Ichimoku. Oh God, there are two people who have voted Ichimoku already, right? But yeah, you can uh yeah, maybe Ichimoku, right? Then maybe I'll get Desiree, not Desiree. I mean, I'll get Cassandra to cover that. It's her strong suite, right? But yeah, NFTs, yeah, NFTs I might cover it a bit, right? It's not tradable here yet, but I think IC recently introduced a couple of cryptos, exciting cryptos they can trade, right? Yeah, Bob, as most people know her, Bob, right? So yeah, yeah, thank you, Saida. Thank you, Saida. Index swing trading. Um, you mean indices, right? When you say index swing trading, do you mean like the S&P, the Hang Seng Index, Nikkei? Yeah, okay. Indexes possible too. I will show you guys. I'll likely show you guys this thing called currency baskets. It's a little bit advanced, right? But it's actually combining like we know the dollar index is the US basket, right? USD basket. There's a euro basket, there's a yen basket, there's an Aussie basket, the pound basket, right? The cat basket, where you can weigh it all out and you can trade by them. It's actually a very, very advanced way of trading. I might do a little bit of my voice. I'm losing my voice. I drank too much during the whole Christmas period. All right, but yeah, that'll be something I might be exploring a little bit into. Okay. Visor intro into NFTs, right? It's pretty interesting. I might look into that, right? Short intraday scalping techniques, right? Ionis, right? I'll be showing you how you can get access to those intraday scalping techniques in a bit, right? So anyway, introducing your host. I keep messing up. Okay, not introducing your host yet, but our agenda for today, we're going to touch really quickly, right? We're going to look at really quickly look at anatomy of a trade again, TP, stop loss, take profit, stop loss, placement recap, break even, partial profit, idea and validation recap. Then we're going to dive straight into the differential trading stop losses, right? And how we can implement it into a trading strategy. Pretty exciting stuff, right? Yeah, it's really pretty exciting stuff, especially how you can implement it into your different trading strategies depending on what you're using. So I just need I think my throat is a little bit wonky, right? I think I've been talking too much for today. Okay, so yeah, implementing into your trading strategy. All right, so Now, without further ado, introducing your host for today, right? This is me. This is Desmond Leong, right? Analyst here at IC Markets, right? So I run the award-winning research firm Everest Fortune Group and also the Forex Army, right? So we are finalists for 2019, 2020, and 2021 for Best FX Research and Best Equity Research. So we usually advise the our institutions on where the markets are heading, banks, brokers, and hedge funds, right? And we have a special partnership with IC Markets where we are bringing you guys the good stuff, the juicy stuff that takes your trading to the next level, right? And we have many testimonials pouring in for people who turn their trading from 40 to 60% hit rate, 60 to 80% hit rate, unprofitable to profitable, right? They get to finally understand how trading works, right? And they have, they dare take on the market with a renewed confidence, right? So I'll show you guys how to get access to all those webinars later, right? And if you guys want to see some of the indicators and EAs I created, head over to the Forex Army, right? I got a trade management EA, which I think would work very well for those of you guys, especially in this webinar series. And if you want to find me on Instagram, just head over to Comfy Desmond. I recently started FIFA 22's Ultimate Team. I have no idea how to play it, right? And you might see me posting a bit about it over there, right? Now let's begin today's session. I need a strepsil. I need a strepsil. All right. So if you want to get access, right? If you want to get access to all the previous webinars, what you want to do is to go to YouTube IC Markets. I'm going to send you this link, right? I'm going to playlist. Yeah, I'm going to play this. Right. I'm going to the English webinars over here, right? I'm going to send you this link, right? So for those of you guys, yeah, I think the trade management series is not uploaded yet, but I believe Ionis, right? You were asking, right? You were asking about the, here we go. You were asking about the strategies for intraday scalping. This is where you can check it out. I got a little bit of a sore throat today, right? But yeah, so scalping. Okay, so go check it out, right? We have the entire series over here, right? All the way from the beginning, right? So those of you guys who tuned in right at the beginning, we started with the US elections, and it was with these calls, right, in the US elections where we're calling for Tesla to go to the moon. We're calling for dollar CNH to drop. We are, I made some of the very, very bold calls over there, right? And he actually won us the awards where we combine fundamentals and technicals really well, right? So you want to check it out, go check it out, right? Thank you, Ionis, right? Yeah, but yeah, just go through all of this. It will not take you, you don't need 30 years in the markets to learn how to trade profitably, right? You need to spend maybe 30 days. Each day you go through one webinar, right? And it will help you prepare yourself very well, take on 2022, with much more confidence in your trading strategy, and I dare say much more accuracy too, right? So this is our teaching series. If you do want to look into our analysis series, what you can do is you can go into the trading analysis, right? So the trading analysis is where we record all the previous sessions, right? And we put it over here, right? So you can see there's no running away with my analysis, right? Everything that we do is over here. So go check it out, right? So you can see last week's session or the past few weeks, for some reason, for some of you guys were asking, it's not right at the top. I'll probably need to rearrange them. You'll find that the live analysis sessions are right at the bottom. So tomorrow will be a YouTube live event, right? So you can click here, you can see the YouTube live. Oops, sorry. Yeah, tomorrow will be a YouTube live event. We'll have our Cassandra won't be with us tomorrow, but I think yeah, Kaylin will be conducting the live market analysis tomorrow. Okay, so do tune in to check it out. Okay, after that, from next week onwards, it should be back to me, right? We'll shuffle around a bit, right? Because I think you guys like the different ways that they present and the different kind of strategies that they have, right? So yeah, go watch this. Yeah, I almost got my playlist over here. And this is the playlist. How do I close this thing? Give it a second. This is the playlist that you want. Why I recommend kind of taking a look at this is because it actually shows you how I break down the markets week after week after week, Our hit rate is a good 70 to 80%. You can see them every single week, the calls we make, right? It's all recorded, there's no running away, right? But hit rate is pretty darn high, right? So go check it out, right? I think you like it. You will appreciate the way that I break down every single analysis, how I look at it. Some markets, the beautiful thing about this is that some markets, you look at it, you're like, makes sense, right? I will trade it. But some markets, you look at it and you're like, what the hell is this, right? I don't completely have no idea, right? So that is where this what's the word this series will help you see and straight away try kind of make a guess, assess like which markets are worth looking at and which markets are not worth looking at. Okay, now without further ado, let's begin today's session, right? So the first thing, anatomy of a trade, right? I'm just going to cover it really quickly. This is what I covered so far. Entry, stop loss, take profit. This was in 1/4, right? Then we covered break even and partial profit, followed by idea and validation 3/4, and today is trading stop loss 4/4. Okay, most people when they are trading, they only think that trading constitutes of this: entry, stop loss, and take profit. But that is as far from the truth as it can be, right? Because there's so much to a trade. Beyond just entry, stop loss, and take profit. You need to factor in your break even. You need to factor in your partial profit, right? And if the market doesn't go against you, if the market doesn't go according to your idea, when do you idea and validate? And of course, when do you activate your trailing stop loss if you want to use a trailing stop loss? Okay, so there's a lot more to the anatomy of a trade than just the entry, stop loss, and take profit. Okay, now moving on from here, right? So just really quickly, we're going to talk a little bit about stop loss and take profit placement. Remember, right? Remember, your stop loss should always be beyond. Your take profit should always be before. Why? It's because, if I see a resistance area here, my stop loss, I want to put it slightly beyond. Right? I want to put it slightly beyond. So give your trade that little bit of breathing space, right? Give it that just a little bit of breathing space, yeah, so that you don't get stopped out. The same thing if you take profit, you see a big support level here, big support level, big support level. Price is coming down, coming down. You want to put your take profit slightly before, right? Slightly before, right? Because many times, if your take profit is over here, right? Price might come down here and then it might bounce up, and then you will miss your chance to take profit. The same thing with your stop loss. Sometimes it might come up here, it tests, and then it reverses. We see that happen so often, right? And if you put your stop loss right over here, whoops, right? If you put your stop loss right over here, that is where you might, you might see yourself get stopped out and price reverse, in your direction after that. Right, so that is the it has happened so many times. Many people think that the market is being the market is against me, forex is being manipulated and stuff, but that's not the truth, right? The truth is, because it's all about knowing where to put your stop loss, where to put your take profit, right? Never ever use a fixed stop loss and fixed take profit just because you read somewhere on Baby Pips, you read somewhere on Forex Factory that, hey, the moving average cross, I'm an honorary member of the Baby Pips Club, right? I'm going to tell you that you need to put the 100 pip take profit, right? And a 50 pip stop loss. That doesn't work. Okay, look at what the market is telling you before you put your stop loss and before you put your take profit, right? Don't just blindly follow someone's definition of where a stop loss and take profit should be. Okay, now moving on. Break even, partial profit, and idea in validation. Okay, break even. Remember, guys, when it comes to break even, you're basically moving your stop loss to your entry. Okay, now break even is basically the place where you say that, okay, if I am right, price should go all the way to my target, but if it goes back to my entry, I am wrong and I should get out. Okay, let me repeat that in slower. In this case, right, we notice that there's a big level over here, resistance. Okay, we would put our break even level at the same level as this big resistance. Okay, now let me show you how this trade plays out. If our entry is over here, right, you can see that there's a resistance, price finally breaks out, right, and we trigger a long entry over here. We're expecting prices to come all the way to our take profit over here, right? So it bounces, and it comes up to here. The moment it reaches this resistance level, this is also the level where we tend to put our partial profit, right? Because when price reaches this level, we move our stop loss. We know that, okay, I entertain the idea that price might come up to here. There's a chance that price might come up to my take profit, but being super duper objective, I will recognize that price previously reversed from this level before. So there is no guarantee that price, would just shoot up all the way. There's a chance that it might reverse. And that is where we move our stop loss, to our entry, right? So this moves it to break even. And it also is a great level to take our partial profit. So we might close out 50% of our position over here, close it out a bit, and we can see that, price failed to break up and it drops down. So we got out of this trade at break even. Otherwise it could have dropped all the way down and stop us out over here. Okay. If we trade gold of US tech with spreads, do we calculate spreads? Yes. Ideally you want to calculate a spread because price might come down to here, right? And if you want to get stopped out at break even, right, you need to factor in that little bit of spread so that you really you don't lose money to the commission essentially. Okay, if you get what I mean. Now, idea and validation. Idea and validation, right? Idea and validation is a level where you say, okay, I am wrong, right? I am wrong. I want to get out of here as soon as possible. Okay, that's what idea and validation means. Okay, so remember for break even, we will move, you have your stop loss and you have your entry, right? You're moving your stop loss to your entry. Okay, for idea and validation is different. You have your entry and you have your take profit. Okay, you're moving your take profit to your entry instead, which is very different. Many people are very familiar with break even. It's the sexy cousin of idea and validation. People like to lock in their profits to say I'm in a risk-free trade, right? I'm just going to let trade run, and I'm going to make money, right? That is the sexy cousin of idea and validation. No one looks at the ugly cousin, which is idea and validation. Idea and validation takes a lot of trading psychology for you to look the market in the eye and say, oh heck, I'm wrong, right? I'm wrong. Time to get the hell out of this trade, right? That is what idea and validation means. It needs you to put down your ego, right, and say that what I thought would initially happen, it is not working. Okay, it is not working. I'm going to get out of this trade as soon as possible. That is what idea and validation means. Okay, so let's imagine that this is, you see that price reverse one time, price reverse two times, and price is coming back up here. We do a sell entry, hoping for prices to drop, right? So we hope for prices to drop all the way down to here, our original take profit. However, right, prices start to rise up, and what I said, right? Put your stop loss slightly beyond. So if this is a key level of resistance, our stop loss, we always put it slightly beyond to give it that little bit of breathing space. So prices come up to here, it touch our idea and validation, which is the purple line. So when something is idea and validated, right, it basically means that, okay, we admit that we are wrong and we move the take profit to entry, right? This hopefully gets us out of this losing trade. So what happens is that our take profit, original take profit, is moved to an entry. So this is our modified take profit now, right? And we just hope that price will make a pullback, get us out at break even, right? And then we don't care what happens after that. So remember, we're in trading, right? In trading is not only about profit maximization. Everyone only looks at profit maximization. Too few people consider the opposite side of loss reduction. One less losing trade means one more winning trade. Okay, if you have 3 winning trades and 2 losing trades of the same amount, your net is 1, right? If you have, let me show you, if you have 3 that take profit and you have 2 that stop loss, your net is 1 TP. Okay, but if you have 3, no, let's just say you 3 take profit and you manage to reduce your stop loss, you have maybe 0 stop loss, 0 that got stopped out, right? You will still have 3 take profit. I'm sorry, my handwriting is terrible, right? That's one thing that hasn't changed the entire year, my handwriting, right? So yeah, so you know, this is not only about profit maximization, right? It's about reducing your losses, right? And loss reduction happens through break even. Loss reduction happens through idea invalidation, okay? This is a really quick example I put together, right? So this is a price over here. We're expecting prices to make a little bit of a bounce, right? We expect prices to bounce up all the way to the 50% retracement, right? Because price bounced up very nicely previously, we're expecting price to bounce up very nicely again, right? So we figured, right, this is our take profit, this is our entry, right? We do a couple of different levels. We have an inverse Nike tick over here, right? And we can see that there's a support level over here. You can see I highlighted 2 support levels over here, right? So I'm going to put my stop loss slightly beyond this key area. Now, what I'm going to do is I'm going to put my idea and validation at this key level. You see, my stop loss is now slightly beyond, right? Like I always said, stop loss beyond, take profit before, right? And I'm going to put my idea and validation right at this level over here. How this works is that price, you know, comes down, you know, we expected it to bounce up, but it didn't work out. It actually comes down, it touches our idea and validation over here. So what happens when price touches our idea and validation is that our take profit is then moved to our entry. There you go. See, our take profit is now moved to our entry, moving our take profit to over here. So we are, you know, our initial idea, right? Our initial idea is that price will bounce this way. Okay. So the moment this happens, right? What we're doing is we're looking at the market and we're saying, oh man, I am so wrong, right? Just get me out of this trade as soon as possible, right? Get me out of this trade. You know, I don't want to suffer this loss. And we move our take profit to our entry. What happens next? Price makes a small little pull up, you know, and we get out at break even because price hits our take profit. We get out at break even, and what happens next is that price just plummets, right? So it would have stopped us out, but thankfully, you know, because we were able to move our take profit down to our entry over here, right? Um, this allows us to get out of the trade right before the market pukes and stop us out. So that is the concept of idea invalidation. So a normal trader would have just said, yeah, you know, price hit my stop loss. But based on your trade management, remember I told you anatomy of a trade is not only your entry, stop loss, and your take profit. It has to do with a break even, your partial profits, and your idea and validation. So this is the concept of idea and validation, which I want you guys to get familiar with, practice and use it, especially in our VIP room. You know, you can run your ideas there. I'm usually around. These few days I'm not around that often because I'm on a holiday, right? But I usually am around to answer your questions over there. Okay, otherwise Kaylin, Cassandra, Angie, Shicheng, they're also around to help you answer your questions. Now, let us begin. Trailing stop losses. We got a question from N. How about it does not come back to entry? Can we close it manually? Okay, idea and validation, right? Idea and validation is that you pray and hope that you get, you know, it goes back to your entry, right? If it doesn't go back, you know, most of the time, if it's very close to your stop loss, you might not even have the chance. Price, like in this case over here, when price comes down to here, it could just as easily, you know, just drop down and stop yourself out, right? It could just have easily stopped you out. Okay, so it's not always a guarantee that you make a pullback. But why, you notice why I place my idea invalidation over here, right? It's because this is a strong level, this is a strong level, this is a strong support level, right? So you don't just place idea invalidation at any random level, right? You tend to put your idea invalidation at the level where you find the strongest level of support and resistance, right? The level where you put your stop loss slightly below, right? You can see my stop loss is here and my idea validation is here. So that allows me, when price bounces off this level, I know that there is a high chance that it might retrace back to my breakout level, or it might retrace back a bit. You need to know where do you want to close out your trade, right? In this case, I put it at my entry. Okay. Oh, Kelvin, if you want to join the VIP room, just head over to vip.icmarkets.com. Okay, yeah, you can check it out over there. All right. This cannot be implemented manually without EA. All right, we got a trade management EA for you over there. Right. However, you can move your take profit manually. You can still move your take profit manually, but that requires you to watch the market. Okay, yeah, thank you, Saida. Right, it's a new, I wouldn't say it's new, but it's an advanced form of trade management, which very few people take notice of. But if you know how to incorporate it into your trading, you take your trading to the next level. Okay. What if take new long position on investment TPs? If you want to go long over here, right? I don't think you should, right? It should, every single trading strategy, you should not be taking a trade just because of another trade. You know what I mean? Right? So if you want to take a trade, let yourself be super clear on the reason why you want to take the trade. Don't just take the trade because you're hoping to make money on this move up here, right? The trade should be taken after you do your analysis on it, right? Don't just play, because if you take a trade from another trade, then you're gonna get your stop loss. Then when you hit stop, you think that price is going to bounce up and you're going to take a trade. That's emotional trading. Every single trade should have its own independent analysis on why you want to take it. Okay. Now, so Graham is asking, how do you tell in IC markets if a trade is running and if it has finished? Do you mean in a trading setup, if a trade is still running or it has finished? Oh, okay. So how do you know when a trade is running and how it's still finished? You need to know what's your plan A and plan B, right? So my plan A is very clear. This is my plan A. Okay, I'm expecting the bounce like this to happen, right? I'm expecting the bounce like this to happen. The moment, right, I'm going to erase erase all ink. The moment this happens, right, can you see, you need to be very objective, right? The moment this happens, right, or even when price breaks this level over here, right, do you think, does this look like a temporary kind of price action before price bounces all the way up? No, it doesn't look like it. If price were to come down, come down, come down, and it forms like a little bit of a doji, maybe I understand. If it forms something like a hammer, hammer like that, tweezer bottom, maybe I understand, right? That shows that it might reverse upwards. But if price closed as strongly as it did over here, right, meaning that oh sorry, erase all in the slide. Yeah, meaning that price really dropped all the way down to here, right? This is a strong drop. It's not like a quick reversal kind of thing. It's a strong drop. Then I know that my original idea just doesn't make sense anymore. Yeah, I hope that clarifies it. Yeah, thanks Visor for expanding on it a little bit more. Now, I do want to touch a little bit on trailing stop losses. I hope that answered your question, Graham. Right. So there are a couple of trailing stop losses which you can use, right? And these are the ones that you can consider. One is the moving average crossover. Okay, I'm not too big a fan of this. Right. One is the parabolic SAR, stop and reverse parabolic SAR. Okay. The other is the ATR stop loss. The next one is chandelier stop loss. Last one, which is more or less my personal favorite, is structural trailing stop losses. Okay, look at the market structure and then you decide whether it's moving for you or against you and where you can adjust it. All right. I think I can cover a little bit on parabolic SAR today. Right. So this is the concept of a trailing stop loss, right? Let's just say, right? Let's just say we have a little bit of an overlap level over here, and we have an ascending support line, and we have a this little moving average. If price breaks this level, right? If price breaks this level, this triggers our sell entry, right? So sell entry and it's going down and it's going down and it's going down. So if we have a moving average trailing stop loss, right? How it works is that your stop loss is adjusted based on the moving average. And it only, once price touches your moving average, then you are stopped out. Okay, so this is a moving average trailing stop loss. Okay, it is useful in certain circumstances, but personally, not my super favorite. Okay, I mean, it does work in trending markets. Okay, and the question also becomes like, you need to adjust. You need to use what I call a natural moving average. Most of you guys know what a 50 moving average, 200 or 20 moving average is, right? But in these kind of cases, it's super important to look for the natural moving average. Um, uh, okay, in a sense, I'll check what you mean by parabolic SAR in a moment. Okay, now the next thing, all right, so if you get stopped out over here, that's great because it would have prevented this from happening, right? So yeah, no, it get us out before this happens. So that's the benefit of a trading stop loss. You know, it essentially helps you get out of a trade before, you know, crazy stuff happens, right? So this is an example. A next one is a trend line trailing stop loss, right? So when the trade happened over here, you know, we had one, two, you know, we can see that there's a trend line, there's a trend line. So we're always putting a stop losses slightly above, or maybe you can, you know, only if prices close above your trend line. So there are two ways to do it. You can put your stop loss exactly at the trend line, which is a little bit tough, or you can wait for price to close. My personal favorite is you wait for price to close above the trend line to confirm that, you know, it has broken the trend line, right? And then, you know, you close out your trade. So this prevents this crazy stuff from happening. Okay, so that is the concept of a trend line trailing stop loss. It's slightly more accurate than a moving average stop loss, but in not all cases you will find a trend line. So this is definitely one thing you can consider. Next thing, a parabolic SAR, right? Parabolic SAR stop loss, when your entry is triggered, you know, you have a parabolic SAR, you know, kind of like trailing prices quite nicely, right? Until price closes above it. Price close above it, you know, it's called stop and reverse. Suddenly, right, your parabolic SAR is below price. So that's the concept of a trading stop loss using parabolic SAR, right? Useful, but you kind of must tweak the settings a little bit so that it's a little bit better, right? But then again, parabolic SAR can be pretty useful, right? I'll see if we got time to go through some examples of it later. Otherwise, we can have a whole dedicated session exploring the effects of using effective parabolic SARs as a trading stop loss, right? The next thing, right, is the chandelier and the ATR stop. Both of them, in some sense, use volatility, right? My personal favorite, right, is to some degree is actually the chandelier stop, the chandelier and ATR. ATR stands for average true range, right? So the great thing about ATR is it kind of measures the volatility of the market and it gives yourself that little bit of buffer, right? So if price is technically going according to your plan, right, going to your trade, that should work out well, right? But how a chandelier ATR stop loss, you notice if you implement a chandelier stop loss, it actually gets you out at very nice levels compared to even the ATR stop loss, right? You compare this with, you know, a parabolic SAR that stops you out over here. You compare this with a trend line. You compare this with a moving average, right? The one that helps you get out almost at the best level is actually at the chandelier stop loss, but it is very tight. And because it is very tight, it can cause you to get out of a trade prematurely too. Okay. So I think a Don chain channel doesn't use that much of volatility. I think Don chain channel kind of just takes the high of the range and low of the range. It does not really factor in a concept of volatility. ATR and chandelier stop losses factor in a little bit more the volatility of the market. You know how big the wicks are, you know how big the candles are, you know, to help you determine your stop loss and take profit placements, your trailing stop loss levels. Okay, so in this case, this is the what's the word for it? This is the chandelier ATR stop, right? You cannot the what you can do in MT4 is to activate a basic trailing stop loss, right? Meaning that you trail by X number of pips, but it does not allow you to have a stop loss based on these special kind of techniques. Let me see, right? IC markets. Yeah, so yeah, you know, if you have, I believe, so if you buy So you can have a trading stop loss, but you notice that in IC, rather on MT4, your trading stop loss can only be based on X number of pips, right? So you can chill price by your stop loss by 35 pips if I'm not wrong, right? So trading stop loss maybe 15 pips, right? So price always kind of chill the stop loss by 15 pips, depending on how it goes. Okay, but personally for me, how I use my trailing stop loss, right? If you guys want to know, right, is I use my trailing stop loss with my trade manager, right? So this is a trade manager which I built, right? Out of my sheer frustration of MT4 not having its own trailing stop loss function. So if I were to buy, let's just say I was to buy over here, right? Let me just disable everything else, right? If I were to buy over here, my stop loss is over here, right? My take profit could be, I could not have a take profit, for example, right? And I say that I want a trailing stop loss to be, no, I need to put my take profit at least maybe over here. I want my trailing stop loss to be activated, when price reaches here, okay? In this case, right, I want my trailing stop loss, to have a simple ATR, chandelier, parabolic SAR steps. But let's just say I want a chandelier, a parabolic SAR stop loss, right? These are the settings of a parabolic SAR. Okay, I think I need to move my entry over here. If I want a chandelier stop loss, these are the settings, right? If I want simple stop loss, this is where it's going to start. You notice if I move my trailing stop value up and down, you notice that this changes. Okay, so I want it to trail by maybe 15 pips when price finally reaches this level over here, right? So this is how you do it. Once it's done, right, you define how many percent you are risk on this trade and you place a trade. There you go. This is your trailing stop loss. You can adjust it as you want. You can even do crazy stuff like you can hide your stop loss. You can create a decoy, right? You can get out of the trade when news happens. Yeah, there's a bunch of crazy stuff here that you can do, right? But how I usually use my trading stop loss is using this MT4 Trade Manager. If you want to get a copy of it, right? I think you can go to search for best MT4 Trade Manager, right? You'll find the Forex Army as the #1 on Google because, well, we are really good. It's one of the best programs out there. Go check it out. You can get it. You can get it over there, right? But anyway, back to today's topic, right? Chandelier and ATR stop loss. This is one of the great ways you can use too. Although one of my personal favorites is actually this thing called a structural stop loss. Structural stop losses. So structural stop losses actually makes use of multiple different techniques. Like you're waiting for price to break through different structures. Once it breaks through a certain structure, whether it's a diagonal line, it's a trend line, it's a channel, it's a support or resistance level, then you can tighten your stop loss to that level. That requires the most kind of active monitoring, but it's also my personal favorite because I think it is slightly better, right? So Neil is asking, if you use ATR trailing stop, what multiple of ATR do you use? So in this case, right, ATR is average true range. If you have 1 times ATR, it means that you are your ATR stop loss is just within 1 times the volatility band of the price. Okay, a good practice, right? Let's see how many of you guys understand my concept here. Would it be better to go for 0.8, 1.0, or 1.2 times ATR when you're using the ATR stop loss? Which one would be better? 0.8, 1.0, 1.2? All right, we got a couple of people saying 1.2. Desiree is saying 1.0. Visor is saying 1 million. Right, got 1.2, 1.2. Quite a number of you guys are saying 1.2. And that is the correct answer, right? Yeah, Desiree, you're wrong. So the reason why you don't use 1 times ATR, right, is that 1 times ATR is just like the volatility of the market. You want to give yourself, stop loss is always slightly beyond, right? Your stop loss is always slightly beyond It's the same thing. The value of your ATR in that case should be slightly beyond. You want to give yourself a little bit more breathing space. If you notice that, let's just say in a super easy example, you notice that this is the price, where the volatility ATR, your average true range of a trade is between here and here, right? This is your average true range, right? That's why if you are buying, let's just say you're buying, you want to put if 1.2 times if this is 1 times ATR, 1.2 times ATR will be slightly below, right? So that allows you to give it a little bit more breathing space in case, it's fluctuating 1 times ATR and it goes to 1.1, right? That is where, if you're using ATR, ideally, a more ideal number is definitely something above 1 instead of 1. It's okay, Dashri. We all learn one way or another. Got some people, most of you guys, okay, it's nice to see you're understanding the concept, because you see, yeah, at the crux of it, right, is understanding the concept of trailing stop losses, right? Or rather, understanding the concept of stop loss and take profit placement. Okay. Now, so what I actually like to do, right? What I actually like to do is to, when you're over here, right, and you're on TradingView, right, there are some ways that you can try to find it yourself, right? You can go to indicators, right, and you can search for chandelier. Yeah, so you see chandelier stop. I would either look for chandelier exit or chandelier stop. Those that have a little bit more more views to it, see more users, right? So chandelier stop actually shows you that, okay, how it looks like if you have a what's the word for it, how it looks like if you have a chandelier stop, right? So if you are short on the market here, right, this is your stop loss, right? As you go down, go down, go down until it comes here, then you get stopped out, right? So this is, you notice that is useful when the markets are moving strongly in a certain direction, but when the markets are like choppy, let me find a time when the markets are choppy, right? Like over here, right? You can see that it gets stopped. Sorry, you kind of get stopped out, you get stopped out, you get stopped out, you get stopped out, right? Got stopped out over here, you get stopped out over here, right? So only when the market is kind of trending, like you play the breakout from here, it can go lower and lower and lower and lower. That's where the true strength of the chandelier stop loss is, right? You can also adjust the I believe you can adjust the inputs, right? What's your ATR period and what's your ATR multiplier? So if you have an ATR multiplier of like, they don't allow decimal points here, like 1, you notice that you get stopped out super often, right? Yeah, you get stopped out super often over here, right? Because you're not giving it enough breathing space, right? So having an ATR multiplier of 2 might also work, relatively better, but in the end, it's still not that great, still really, really not that great, right? So this is a chandelier stop loss. The other one is what I call ATR stop. Yeah, ATR stops. I think you can use this on your ATR. Yeah, ATR stops, right? So this uses, if you click on the settings, it shows you what's your ATR multiplier, right? 1.2, and let's just say your period is, you have a 14 period and your ATR is 1.2. This is how it looks like. Well, it's a little bit, maybe it's a little bit wrong. Let's have an ATR of 2. That gives us a little bit more breathing space, right? So you can see, yeah, sometimes it holds up nicely. So how this works is that even a price passes it, it doesn't close it out. Only when prices closes below it, then you can consider it as then you can consider flipping around the position, right? So these are a couple of ways that you can look for this kind of ATRs around, right? On TradingView, right? You can probably find the indicators on MT4 too. Okay, MT4, MT5, you can find ATR. I don't think you can find chandelier. I don't think you can find chandelier here. Yeah, you can't really find chandelier exit over here. So yeah, so you can go on TradingView and you can go find it. Okay, you can go on TradingView and go find it over here. My personal favorite, right? My personal favorite is that if I were taking a trade over here, what I would do, right? Let's just say if I was playing the breakout, let's just say if I was playing the breakout for price to break out over here, right, I would also consider if my initial stop loss, right, if my initial stop loss was over here, for example, when price breaks out from this level, right, I would still leave it there. This is the next key support level, right? So this next key level. If price breaks this level, I will tighten my stop loss to be above this key structural level, right? If price breaks this level over here, you can see it comes down, it tests it a few times, and it finally breaks this level. I would move my stop loss from here down to here, right? So you can see along the way, um, maybe for starters you're just using support and resistance, right? But then over time you know how to include stuff like a Fibonacci projection, right? So in this case, 78%. See, price bounce off the 100%, right? So if price breaks the 100%, as you can see over here, right, then I will put my trailing stop loss to over here, right? So this is what I mean by structural, right? Oh my, my throat is hurting a bit. And this is what I mean by structural, right? You don't just use a trading stop loss for the sake of using a trading stop loss, right? Don't just throw on a parabolic SAR, don't just throw on an ATR, but rather, look at the key levels that prices are breaking. Breaks this level, good. You move your level here, because let's look at it over here, right? Let me see. Let me see if I have the replay function, right? Okay, because if you look at it over here, right, when price has broken this level, what is this level now? This is what we call a pullback resistance, correct? This is a support level over here. If price breaks out this level, let's just say price breaks out of this level, right? Yeah, breaks out. Yeah. So now this level is not a resistance. Now it's a pullback resistance, right? So technically you can put your stop loss slightly above this level, right? So you go, right? See, it comes back there, it tests that level. You tighten your stop loss to this level, right? And then you notice that there's another key support level over here. Okay. When price finally breaks this level, right, you can tighten your stop loss to this level, right? Because now it's not only, it looks to make a pullback to this level. Now this is the pullback resistance that you're looking at, right? So you play on a little bit more, right? And of course it doesn't make, and you get stopped out over here. So that is the concept of structural trailing stop losses. It's the most advanced, right? Because it requires you to constantly monitor the market and determine when key structures are broken, right? But when key structures are broken, that's where you kind of tighten your stop loss, and that is the most is the most tedious, but it's also the most personally I find it the most effective, because you're not relying on some random formula to just determine your stop loss, right? You're actually looking at pure market price movements to determine how much closer to tighten your stop loss. Okay, I hope you found this session useful, right? It's a little bit more advanced, right? It's a little bit more advanced. It really covers the trailing stop losses that we can look at, that you should look at, right? But the biggest takeaway is that when you're trading, don't just use entry, stop loss, and take profit. Look at how you can combine stop break even. Look at how you can combine idea and validation. Look at how you can combine different kinds of trailing stop losses, like trend lines, structural trailing. If you're not too familiar with that, right? Parabolic SAR, chandelier. Usually I would lean towards ATRs. ATRs and chandeliers first, and otherwise, if you can, structural trading stop losses are one of my favorites. All right. Amen is saying that if you're in a very deep losing trade, will you keep it open and revenge trade the other way around, right? So if you're in a very big losing trade, the problem there is that you are emotionally charged. Every single trade you're trading is meant to try to cover that loss, right? I would just close out that trade, because you need to ask yourself, if you're in a very big losing trade, the first question you need to ask yourself is, where was your stop loss? Did you move your stop loss? Because if you move your stop loss, then your original idea is not valid anymore. Okay, imagine, let's just say this is my original trade, right? I have ascending support over here. right? My original trade is that this is my entry, okay? This is my entry, right? I'm gonna put my stop loss over here, right? I'm gonna put my stop loss over here, and my take profit is over here. You know, I'm playing the bounce up to maybe the swing high over here, or maybe I'm just playing it up to this level, the overlap level over here. Okay, this is my original idea, right? Okay, maybe my take profit. I'm just moving it slightly higher here. Suddenly, you know, so it's going up, then it breaks. Then I panic, right? I'm like, okay, let me move my stop loss slightly below. Okay, let me see how it goes. Let's just move it here. Oh, sorry. Yeah. Okay. Then we see it breaking. We move our stop loss slightly lower. Okay. Then we're like, oh wow, it's so close. I'm gonna move my stop loss slightly further away. Right? Then we see how it goes, right? It might go back up, it might go back up, it might go back up, right? We're hopeful about that, but then again, it goes down, it goes down, it goes down, right? It goes down, and we're like, oh man, time to move it slightly further down, right? Then we watch it, it goes further down, it goes further down. We're like, oh man, time to move it further down, right? Give it a little bit of breathing space. At this point, you must be asking yourself, right? At this point, you must be asking yourself, this was your initial trade, right? If this was your initial trade, let me just adjust this, right? So it doesn't highlight to the right. This was your initial trade over here, okay? Your initial trade was that you're expecting prices to bounce up. Does this, you know, after price is doing all this over here, does this look like your trade? You are still, this is the original idea of your trade, right? Is it still your original idea? Or what is the reason you're thinking price will come all the way back up here, right? It's a completely different trade, right? Because you move your stop loss way too far, right? And you lost sight of your initial trade, the initial trading strategy that you had. Okay, so this is a very important point. Always ask yourself, is this trade still following my original trading strategy? Is this my plan A? Was this my plan A? Sometimes, you know, you keep moving a stop loss, and then one day you just wake up and like, why am I moving a stop loss so far? Why do I think that prices will come back up to here? Initially, I understood that price will come back here like this. But if price goes down and goes down and goes down, why do I still think price will come back here? If it doesn't make sense, get out of the trade, right? Because you are putting yourself in a losing position. Yeah, that's one big way to blow your account. Thank you, Bernard, right? And thank you, Mark. Okay. So I hope you understand the concept over here, right? You have a trailing stop loss, you don't have a trailing take profit. Okay, don't keep moving your stop loss further and further away. Okay, guys. Now, what I want to encourage you guys to do is tune in for tomorrow's live market analysis done by Kaylin, right? It's it might not be I think they haven't did the YouTube live event yet. I will check it out. Um, they might have forgotten to put it somewhere. But don't worry. I will put a live YouTube event for you guys to tune into for tomorrow. So just go check out the IC Markets YouTube page, right? Kaylin will be around at 5 p.m. Right, Kaylin will be around at 5 p.m. to do a YouTube live. So go remember to just check it out, right? It'll be a pretty chill event. Same time, same place, right? Same YouTube live event. Okay. Now that's it from me. Thank you so much, guys. Thank you so much for tuning in, even during this Christmas period. I really appreciate you guys hanging out. Right, it's been a fun time. Right, it's been a fun time. Right, I hope you found this session useful. Right, find me at the VIP, the VIP room where I can share and chat with you a little bit more freely. Right, and yeah, thank you so much. Thank you, Amen, Asap, Jamilu, Manmir, Bob, Lulian, Saida, Azam, Desiree. Right, it's been great, Eunice, too, right, to sharing with you. I will see you guys next week, right? So until then, have a happy new year, a Merry Christmas, of course. Happy New Year. Stay safe, guys. Trade safe, right? Yeah. Peace out. Take care, right? Happy New Year. New Year, new trading history, new trading targets, right? Yeah, it's been a great year with you guys. So thank you to and cheers to friendships being formed. Cheers to meeting you guys, knowing you guys better, right? And cheers to making new breaking new records in our trading. All right. Thank you so much. I drop the mic, drop the mic, drop the mic. That's the most I can drop the mic, right? Okay, mic drop. See you guys, man. Cheers. Peace out. Take care. Adios. Stay safe, guys. Bye bye. See you guys.